Good afternoon, everyone. How are you all? Okay, I'll just wait for 1 more minute and let other participants join in before we start with today's question and answer session on finance. So just a couple of minutes. In the meanwhile, if you have some questions which you have not posted on the registration link, you can share it here and I will take it up if time permits. Okay, so I think we are good to go. We'll start it off from here. So I had thank you so much for all of them who had registered for the session and had posted their queries. I will take the questions which have come to me one by one and post that depending on the timing I will take the live questions. So first question I have received is on how to plan tax reductions. So what is tax reduction? Basically, we want to save our taxes. So how can we save our taxes? Government of India in every year in the budget they share some ways or some deductions or some implications where you can use those plans and you can have a better tax savings, right? Because their vision is they want that more and more people go into tax saving with lot of investment so that it is good for their financial well-being. So if I talk about tax reductions, the for a salaried, because this question came from a salaried person, so the tax deductions are 80C, under which you can take the deductions of life insurance premium, PPF, tuition fee for full-time education in India. You can take the deductions for if you have made any investment in fixed deposits. And there is one deduction called Shukanya Samriddhi Yojana investment, which you can do the investment for your girl child. That also is covered under the section 80C, and you can claim deduction if you have made any investment for this particular investment plan. Apart than this, there are a lot of other deductions available also, like 80D, 80E, 80G, which covers lot of other areas as well. So you can just go with the income tax portal and see which deduction is applicable for you and you can take the benefit of them. Okay, hope that answers the question. I'll come to the next question, which is how private equity raised in a private limited and how it impacts the financial statements. So what do we understand by private equity raise? Let's understand first with the concept of how a company is formed. A company is formed when someone has in his mind an idea or a business model to start with the business, right? It can be one person, it can be idea of a group of people also, 1 person, 2 person or 4 person. Now after they have thought about the business model, now what they need? For any business to start, initially you will need some money to start with the business. Maybe you are into a service industry. You might not have be required to purchase any raw materials, machineries for your product. But you might need money to start with the marketing, with setting up a team. So initial investment when you do in your business, that is called equity. So if I am a single owner and I put my money in the business, that will come as a equity. However, if I feel that I do not have the sufficient money and I want someone else also to contribute with me for my business, and in return I will give him the private equity. That means, let's say I asked my friend and he invested 25% of the investment in my business. So in return he is getting the equity of the company. That is, he is getting 25% ownership of the company. So how it is raised? This is the process. It is raised. You can reach out initially. Every business you start with friends and family, with your own money, with your friends' money, with your family money, trying to get into, so that you don't have to go into lot of equity exchange. You can just ask a family member that you give me money, I'll return in 2 years, friends, so they will help you. But in case you don't get that support, then people go ahead and reach out to investors, where they are someone whom you don't know. So why would they help you? So they would need something in return, so they will take the ownership as equity in the company. And if you don't want to go with this mode, there are other modes also where you can get your financing for your company. So that is private equity raise in a private limited company. Now, how it impacts the financial statement? In the financial statement, if you have taken investment for your business through private equity, then you will have multiple shareholders according to the division. Like if two people have invested in the money, invested in the business, then under the equity there will be 2 shareholders. So this is the impact it will come on the financial statements. Now coming to the next question, is it more tax beneficial to form a private limited company or LLP or trust if my company is planning to take up a real estate project with huge profits? Now first let me make the thing very clear that the formation of a company does not depend on the type of business you are forming. Okay, be it real estate, be it any software company, be it any manufacturing unit, there are certain things which you need to keep in mind before going ahead and deciding whether I want to form a LLP or a trust or a private limited company or a sole proprietor or OPC. There are various forms. So what are the criteria or what are the things you should know before getting into the business formation? Which are, so I'll talk about different kinds of companies formation, business formation. One is proprietorship company, where there is one single owner. One is partnership, where there is more than one owner of the company. One is company registered under MCA. So under MCA, when you register under Government of India, so what are the forms? One is OPC, where is one person company, registered proprietorship. One is public limited company, other is private limited company, and LLP, which is limited liability partnership, registered partnership. These are the form of business forms which you can register your company with. Now how would you decide which one to follow? Like which company formation should I take up? So if you want to go, if it's a startup and it's a single owner company, then you go with a sole proprietorship. And later on, if you want to add partner also to your business, you can add partner and make it a partnership firm, or you can go into a LLP also. And once you plan to scale up, or you see the tendency and you see the company is scaling up good and you want to make it in a bigger platform, then you can go ahead and convert that business form into private limited form. And I'm sure, of course, you must be aware of public limited company, that once the company is listed on stock exchange, it becomes public limited company, right? So understanding the concept and understanding the reason of that kind of business form is very important, because if you initially go into private limited company as a startup, there are a lot of compliances and regulatory laws which you have to follow, which might not be very beneficial for an initial startup where they are into no revenue or very minimum revenue, because it has cost attached to it. So initially you can go step by step according to the number of owners. and the vision with which you are taking up the company. Now I'll go to the next question. How to understand a company's cash flow? A company's cash flow can be understood by referring to the cash flow statement of the financial statement. A financial statement has 4 parts. One is balance sheet, one is profit and loss, one is cash flow statement, and one is notes to account. So in the financial statement you will find a chart which is mentioned as cash flow statement. When you go through the cash flow statement, and you first thing which you observe should be excuse me, net increase or decrease in cash and cash equivalent. That will give you a overview of how much cash is there in the company and where is the cash being used. It will give you the overall picture of the cash inflow and outflow of your business. Now coming to the next question is how to avail subsidy. So there are various kind of subsidies available for various sectors. Like there are export subsidy, there are MSME subsidy, startup subsidy, import subsidy, a lot of other subsidies are there. But if you want to avail any of this subsidy, the first thing which you should keep in mind is your document should be very proper, your documentation should be complete, your compliance and regulatory things, whatever is the legal requirement, it should be done, your company should be registered, and then you will be eligible to avail for the subsidy. Now depending on your company, what kind of subsidy you want to avail, you can reach out to your professional, you can reach out to your advisor of the company, and they will be they will be able to help you with this question. Next question is on books to be maintained at a startup firm. Like if it's a startup firm, what kind of books of accounts you have to maintain? If you are a startup firm, the books of accounts to be maintained are cash book, journal, ledger, copies of all the bills of receipt and payments made, invoices, proper filing of all the invoices, proper filing of all the legal documents, and balance sheet, trading account, profit and loss account, and record of sales, purchase, including your plant and machinery or asset and liabilities. Any purchase, sale, or any transaction happening, you should have a proper document, proper invoice or proper bill of that to support that yes, you had made this purchase. So you have to maintain all the books of accounts for a startup company. Just not the startup company, for any company you should maintain these records, so that your financial statements will give you a true and fair view, which you can very well validate with the bills and receipts and invoices and various other documents. Okay. So I think these were the questions which were relevant. There were some couple of other questions which were not relevant to today's topic. I request them to reach out to me or send me a separate message. I will be more than happy to connect with them one-on-one and guide them, because this is not relevant to today's topic, so I'm not taking them up.